Good afternoon, this is Rich Nelson with Allendale, covering the wrap-up commodity comments. Today is Wednesday, September 22nd of 2010. Action on this Wednesday, kind of a mixed here for the most of the part. We've got corn up a half-cent here today on the close, and that's actually a last trade, not a settlement. We do see the beans right now up 10.5 cents, and wheat's up about 2.25 cents right now. Overall, a little higher trade on the grain complex. Not any major moves to speak of, though, at this point here. As far as the corn, key question that the traders are having is we now have 3 days of actually steady, if not maybe just a little lower trade here for the most part. We haven't seen any one of those big rebounding type of days here like we all were expecting to after the last couple of days of action. So at this point, corn is still in a holding mindset. One of the things we kind of learned this week, which was a little surprising, was most of the trade does not believe that corn yields are 160 or below. In fact, a Reuters poll out yesterday morning showed, I believe, is 160.6 is the average guess right now, and that still gets us just above the levels we need to say that ending stocks will be over the 1 billion bushel mark. So at least for this point, surprisingly enough, the trade does not believe that corn yields are in danger territory here just yet. Maybe they will be if conditions continue to deteriorate here on these weekly crop ratings reports. Maybe give a couple more weeks of those, and we'll start to see some people start to be a little more concerned here. But at least for right now, corn is at a holding pattern. We will note that Egypt picked up about 120,000 tons of U.S. corn. That certainly helped us out a little bit here. Over on the soybeans, same scenario. We will note that where corn is not being a leader of the beans anymore, we will note that it's a little surprising to see that beans are actually finding a little support from China, buying for 3 days in a row now of U.S. soybeans. Today's purchase was a good 226,000 tons, so certainly a good amount on this end here. Also note, traders are a little concerned about this weather issue with Brazil. The fact that Brazil is looking at planting here, and as we all know, they move more or less from the north and move down to the further south as planting progresses. At this point, they are saying that rains won't be a problem for the south, but the northern and center areas and even the center-west areas are still a little dry at this point. Most forecasters down there would like to see a little rain added the next couple weeks, but they are saying that it's not scheduled until maybe after the first week of October. So at this point, there's maybe a slight amount of concern there for the Brazilian crop as well. Out tomorrow morning, we'll have the U.S. monthly census crush report. Keep in mind that as far as monthly soybean crush numbers, we get those on the 14th from the private industry, NOPA, and then the government confirms those usually around the 24th or 25th of each month. We're using what they call the Census Bureau reports. And at this point, the average guess for tomorrow morning's report is 127 million bushels were crushed in August. That's the average guess. And if you plug in the September through August reports, because this wraps up the marketing year for last year, that would equal about 1.751 billion bushels. And you know what? That's right on USDA's number for old crop crush, 1.750. So at least for this point, looks like the USDA is right on target with the crush number, is what the trade expects us to say here. So overall for soybeans, with the slight concern for the Brazilian crop issue, as well as the 3 days in a row stronger purchases from China, a slight amount of premium being added over the soybeans. Over on the wheat side, we can note some good news on this end. The fact that Egypt picked up about 220,000 tons of U.S. wheat. That's considered a very good thing. Second issue I can note this morning, we had in our comments that Russia is 82% harvested. And they estimate that 30% of the crop is just completely devastated due to the drought. So for this point, looks like Russia's got a known amount of production. Maybe one slight adjustment here or there, maybe next month. But for the most part, with production wrapping up, or with harvest wrapping up, we should not see many more major changes to Russia's production numbers. Other issues here to speak of, new crop planting for Russia. The Agriculture Ministry has brought down their estimate of acreage. They were saying 16 to 17 million hectares. Looks like they have brought those down to 15 million hectares. So at least for this point, a little more slightly bullish tone being added to things here on the wheat side. Over in the complex here, as far as the livestock, a little surprising, negative across the board. We see the hogs down 57 cents here today. looks like newswires have come out with average guesses for Friday's Hogs and Pigs report. And the key thing that we're looking for is that the trade apparently agrees with us in saying we're not going to have any major shortfalls in the slaughter levels lasting much longer. Keep in mind, late July, all of August, and most of September here have all seen lower than expected slaughter levels on the hog side, down 6 to 8% here for the most part. Whereas the June Hogs and Pigs report told us maybe 4, maybe 5% here or there. So for this point, that's the key thing we're looking at. Once you look at the breakdown as far as the marketing numbers, the kept for marketing numbers, it looks like we are going from a shortfall. The 180 pound and over hogs, those are running about 5% lower than last year. As we work through the next phases as far as the hog weights, looks like those will slowly decline, meaning the difference to last year is not going to be as great. So bottom line here is we have a few extra hogs which will be showing up here at the front door. One of the key things that we will point out, though, is for right now, this industry is still in light contraction. Our measures of sow slaughter that we talked about in previous commentaries, 14% higher during the months of July, August, June, July, and August here for the most part. So that means we're still not in expansion, at least for this point. We do expect by second half of 2011, we will be seeing more hogs show up at the front door, but for right now, looks like we're still going to have a slight deficit in numbers running through the first half of 2011. One thing that the trade's focused on, though, is this short-term picture, meaning those slaughter numbers I mentioned earlier, and the fact that these hogs and pigs estimates so far say that this shortfall is going to be lasting only for another couple weeks, and then we're going to move into more comfortable numbers. So keep that in mind here. Over on the cattle side, down 127 for the October contract. Certainly a big decline there. In the past 4 days, those futures have dropped. I've got $3.25 for the October contract. So certainly a pretty decent drop in the past 4 days as far as key issues right now. On this one, it looks like we've got this this market is still being beat up a little bit here by the placement numbers, the fact that we are going to see higher slaughters running through the rest of this year. That's already set in stone based on that placement rate from the past 6 months. So that's one key issue there. One thing we can point out is we're also at the same time as seeing those higher numbers begin to show up. We're also noting that beef was a little weaker than we expected, almost for 4 weeks straight now. We've seen almost daily declines in box beef prices. We can note that this morning's report, the midday beef report, actually showed up 32 for choice and up 88 cents for select. So are we seeing a change of this? Are we now going to see some stability show up here on this beef end? If so, we might see some stability show up on these futures right now. And also, you know what? We've been talking about in the report this morning the fact that December cattle still have a very good, very large gap open at higher prices. Take a look on the charts and you can take a look at it for yourself. So at least for this point, we still think that the longer-term picture is bullish for beef, meaning into 2011. For right now, we just been waiting for this trigger, waiting for a sign to pull the trigger here on the getting a long-term bullish. Maybe if this beef stabilizes, we can start to make that argument here. So overall, maybe a mixed, a little higher action for grains today. Overall, as far as livestock, certainly mixed a little bit lower here. As far as key reports you have coming up, this afternoon we have the 2 p.m. release of cold storage. Keep in mind, we've got that coming up. You can get information on that by calling in here, and that's 1-800-262-7538. Also, we've got the quarterly hogs and pigs, as I mentioned before. That'll be out Friday at 2 o'clock. So a lot of excitement here on the livestock end for this week at least, and we'll kind of go from there here. If you have any questions about markets, marketing, or trading in general, please feel free to give us a call, 1-800-262-7538. This is Rich Nelson. Have a good trading day and a good trading week.